This is the weekly chart. As you can see, this could take months for silver to stabilize, everybody to slowly build confidence and slowly creep back in. Silver could just rebound straight back up and keep moving. This is the thing. Nobody knows, right? Everybody wants me to say, this is what's happening. This is when it's happening. And that's what a lot of people always do. And it sounds great because we all do want to be kind of told what to do. Like, what do we do? Where's it going? When? But in the markets, that's not how it works. And we don't know if silver is going to rebound and be hitting all-time highs in 4 or 5 days, or it could be 2 or 3 months later and we've only recouped half of the drop type of move. And that's what we don't want to get caught in. That's why we always exit positions, because a trade could go sideways for months. It could go sideways for years. And in a lot of cases, they do go sideways for years after a big correction, especially in the precious metal space. So we want our money to be working for us. If silver's not moving, or gold, we want to be somewhere else that's not costing us money, because it does cost money to hold and store silver, depending if you're holding physical or not. If you take a look at the equities market, they continue to grind their way sideways and up. We are still long the S&P 500, which is slowly pushing and hit all-time highs really just a few sessions ago. Looks like it's getting close to threatening to break out again. Now, when something trades sideways and kind of builds this kind of movement, it really is building energy for something else. The more something kind of chops around, the more power it could have when it starts to break out. So we need to see which way this is going to go. The long-term trend, the 150 days sloping up. All of our other moving averages are sloping up. The bias is to the upside, and the money is still flowing into the equities market. And of course, we're seeing, I think, some money flow out of the precious metals market and go into equities. I think there was quite the shell shock there with the big sell-off in gold and silver. And instead of equities selling off and money piling into gold, we saw gold and silver crash, and money's piling into stocks. People are licking their wounds and trying to regroup. So definitely the markets are kind of sloshing back and forth. Where is money going to go? Precious metals or stocks or both, which we have seen both for a long time. When we look at the comparison chart, if we just get rid of there, you can see gold and stocks have been going up together for a long time. So that's not that's the norm. We could very easily continue to see that, which is why we follow the trends and not get caught up in the news. Over at where money's flowing today, we are seeing money flow into stocks. We're seeing equities up about 0.5% on average. If we take a look, the dollar's down a little bit. We do have gold making that comeback. Nice rally this morning, up 6, almost 7% this morning. We did get very oversold, margin calls, panic selling. It was, the euphoric people piling in right here are the people who probably got washed out right over here. And now the market's stabilizing and figuring that out. When we look at the 30-minute chart, you can see it did dip into oversold territory. It came down to this pink line, which is the 20-day moving average as well, which if we look at for some reason it's not, here we go. The pink line here, this is the same pink line kind of carried over. So price came down to the 20-day, flushed through it, lots of volume, and now it's starting to rebound. So a lot of damage was done to the chart. Could gold hit all-time highs? It's possible it could keep going up. This could just be a very quick buck in the market, just like this, and then boom, it just keeps going. Or it could work itself sideways and up and build a bearish formation, and it might actually start to break down. And we just have to manage our positions. We closed out some of our position right up near the highs here, and now we are waiting to see what is going to happen with the overall price action to exit the rest of our position. Now, if we take a look at silver, it's up 15% today, so it's having a nice rebound. It's got quite a bit of work to do to get back up, 15% move. Just to give you an idea of how much more work it is to make gains. So it fell 41% from the peak all the way down here, and then in order to get back to that, you need to rally about 70%. This is like insane volatility space, and it's very quick to lose money, but it takes a lot more effort, twice as much effort to make it back, and usually 7 times longer to make it back. And that's the killer, right? That's why we don't want to lose money, because you waste a lot of time trying to recover from losses. It takes weeks or months to get up, and then boom, you lose it in one day. And that's what we need to be aware of. Time is the most valuable resource that we have. So I shared this chart last night in the members update. This is the weekly chart of silver of just right now, the 2026 drop, and then we have the 2011 drop. If you look at the charts, they are pretty darn close to what they were. And this is what I've been talking about, expecting in the silver market. Hopefully we're going to see some drift back up in price, and then we can potentially trim off more position, lock in more gains. We'll see how it unfolds, manage the rest of our position. You can see it did this very similar type of price action. The run up, the pullback, the move, even this pause here is like a pause right here. And then you go into this euphoric phase, and then everybody gets the rug pulled out from underneath them and everybody jumps. And so that's kind of where we're at. Now, this is the weekly chart. As you can see, this could take months for silver to stabilize, everybody to slowly build confidence and slowly creep back in. Silver could just rebound straight back up and keep moving. This is the thing. Nobody knows, right? Everybody wants me to say, this is what's happening. This is when it's happening. And that's what a lot of people always do. And it sounds great because we all do want to be kind of told what to do. Like, what do we do? Where's it going? When? But in the markets, that's not how it works. And we don't know if silver is going to rebound and be hitting all-time highs in 4 or 5 days, or it could be 2 or 3 months later and we've only recouped half of the drop type of move. And that's what we don't want to get caught in. That's why we always exit positions, because a trade could go sideways for months. It could go sideways for years. And in a lot of cases, they do go sideways for years after a big correction, especially in the precious metal space. So we want our money to be working for us. If silver's not moving, or gold, we want to be somewhere else that's not costing us money, because it does cost money to hold and store silver, depending if you're holding physical or not. Start a few days ago as well, which was the S&P 500, gold, silver, Bitcoin, and the dollar. And this is kind of the whole theory of the rising and falling tide. When there is broad market, worldwide selling, fear across the board, stocks, gold, silver, Bitcoin, pretty much all asset classes go down. The safety thing is to know when to step aside, move into cash, and hopefully be holding a currency that isn't plummeting, one that's holding some value or hopefully going up in value. And so that's the whole philosophy behind asset revesting, is we're only going to hold assets going up. We also know in some cases, almost all assets go down. So we have to sit on the sidelines in cash, which is an asset. And it does generate returns if traded properly in the right currency. You can actually generate some pretty decent returns sitting in cash by playing currency exchanges. So last night, if you didn't read the evening update, I would go in here and give this a read. It's a pretty interesting read, very educational. The bottom section here going into gold, a story about a trader who lost about 2/3 of their account in one day trading futures, and a few other things. Lots of educational stuff here. There's lots of great comments. So be sure to read them all, because this is the way I believe people should view the markets. People get caught up on saying they lost a ton of money, and it's not like they actually lost money. They just gave some of the returns back, or they don't have access to them because the market took it away. But it's not your profits until you actually hit the sell button. Once that money's in your bank, if somebody steals your money out of your bank account, that is you've lost money. But in trading, it's not your money until you actually sell. So concepts that will change or hopefully pivot the way you look and navigate these markets. So when we look at the market in general, in the gauge where we're at, we're still in this defensive phase. We're still seeing stocks grind and trade their way higher. Precious metals are still in favor, even though they've had a big bout of selling. And I know a lot of people have given up on metals already. I haven't given up yet. The long-term trends are still intact, and things could still go higher. At best, I'd love to see gold and silver recover half of their move or so, and then I might actually liquidate half of the position I have remaining. Just cut it in half, lock in more gains, because we've got some pretty good exit on our first chunk, and I'd like to lighten the load because I'm worried that things could roll over and sell off. And I am very happy with the returns. I think we're several 100% with our positions from long-term play in the precious metal space. So let's go take a look at the rest of the market here. Let's take a look over at, see what platinum is doing. Platinum up 6%, palladium up 6%. These are all the same plays, right? I'm expecting we're going to see some type of drift up. It'll probably want to come back up into resistance. If you're in a position, trimming off, reducing losses, exposure, this is volatility. This stuff is dangerous. This was a really nice looking pattern. It started to break and run, but it has been rejected, and now there's a lot of damage done to the chart. So I think it's, it could recover, but hoping is not a good strategy. This is more so look for the drift, these inside bars. Inside bars, if price goes up inside one big red bar, usually it resolves. You can see it resolve back to the downside and then break down. This could very easily be a head and shoulders formation for all of those lines I just squiggled on there. Now take a look at palladium, much the same. Not many people traded palladium simply because I mentioned before it was pretty ugly, lots of damage done. It really just had a fake out and broke down. So hopefully there aren't too many people in there, but it should hopefully do the same thing in terms of drift a little bit higher, get out. I'm not a fan of this play anymore. This is serious noise and potential double top, potential just pretty ugly coin toss type of play, if not less odds than a coin toss. Now, natural gas took a hit yesterday. It was down like 24%. It took a big hit, and it's trying to stabilize here. Again, all over the place, very dangerous. We don't ever trade it. I used to trade it, but once it gets you sucked in with some big gains. This is like picking a top or a bottom. If you do pick, you buy and you catch one of these big moves, you feel like you know what you're doing. But you can give it back quicker than you made it in some cases, even on spikes. And it's just very dangerous, right? You're walking through a landmine. The natural gas space is just super dangerous. And picking a bottom or a top and nailing it and making a ton of money is the worst thing you could do, because you will think you can do it, you will start to do it more often, and you will start to lose more money more often. And some of the biggest moves happen right at the end of trends. So right when you think it's a top, the market surges and goes against you, and you lose money really fast. You get these explosive blow-off tops, you get explosive washout lows. Picking a bottom, same type of thing. You think you got the low, and then the bottom drops out again. Let's take a look at crude oil. It's at a bit of a haircut over the last session, having a little bit of an oversold bounce, just mean it dropped like 5 or 6% yesterday. It's a pretty big move, so it's taking a bit of a pause for people to kind of shake off what's going on. We'll see how all of this unfolds, but when we look at the big picture of oil, it's more or less in a downtrend, and this is just a spike. Kind of a news-driven, emotional-driven move, probably a short squeeze in there as it starts to break out. People covering shorts, that's what creates a lot of these spikes, and then, of course, it just fizzles out and sells off. So we'll see how that unfolds, but I do believe we will see energy back down at the 55, 56, and much lower later this year.